Welcome to Talk Tickers. You're tuned in for your shortcut to understanding the key takeaways from the latest earnings calls.
And today we're diving into a recent call. We'll pull out the essential numbers, the strategy, basically what you need to know.
Right. Let's jump straight in. This company certainly had, well, a lot to talk about.
They really did. It looks like a company operating at a pretty high level right now. We saw record customer adds, strong financials, network advancements, the works.
Okay, so let's maybe start with just a quick snapshot of those headline results.
Good idea. So first off, Q1 was record-breaking for total postpaid net additions.
How many was that?
1.3 million, a new Q1 record for them.
Wow. Okay, and they led the industry again in phone ads.
Yep. Postpaid phone net ads came in at 495,000, leading the pack.
And I saw something about ARPA growth, average revenue per account.
That was strong too. Postpaid ARPA grew nearly 4%. They said it was their highest Q1 growth there in 8 years.
4%. That's that insignificant. Suggests they're getting more value per customer, not just adding numbers.
Exactly. It points towards, maybe successful upselling or just stickier, higher value customers. And that strength wasn't just in phones.
Ah, right, broadband. How did that look?
Still dominant there. 5G broadband net additions hit 424,000.
And wasn't that like a long streak of leadership?
It was their 13th consecutive quarter leading the industry in that specific metric.
13 quarters. Okay.
Yeah.
What about the core financials? EBITDA, cash flow.
Solid. Core adjusted EBITDA grew 8% year over year.
8%. And they made a point about comparing that to competitors, didn't they?
They did. They highlighted it was double the average growth of their wireless peers.
Okay. Double. And cash flow.
Another record. Adjusted free cash flow hit $4.4 billion, a new Q1 high.
$4.4 billion. That's substantial. And revenue.
Growing, too. Overall service revenue was up 5%.
Okay.
And postpaid service revenue specifically was up 8% compared to last year. So, pretty broad-based financial strength backing up those customer numbers.
Absolutely. Okay, so that's the big picture. Really strong start to the year. Let's maybe unpack how they're doing it. What's driving that customer growth?
Well, they emphasized it wasn't just one thing. It was a record Q1 for total postpaid gross additions across all categories.
So phones, other devices, broadband, everything.
Everything, yeah. Total postpaid, phones, non-phones, 5G broadband, all hit record Q1 gross adds, beating their previous best year. And of course, they mentioned their continued lead in attracting those postpaid phone net additions.
And what about the business side? T-Mobile US for business.
Sounded like really strong momentum there, too. They let in both total postpaid and postpaid phone net ads for business customers.
Okay.
And they even called out a record quarter for adding new enterprise customers specifically, so moving up market a bit.
Interesting. Are they getting these customers onto higher value plans?
Seems like it. They shared a pretty striking stat. 60% of new accounts are opting for their premium plans.
60%. Wow. How does that compare to their existing base?
It's double the rate of the existing base.
Okay, so that ARPA growth we saw makes a lot more sense now.
Exactly. And related to that, they just launched new plans, Experience More and Experience Beyond, aimed at simplifying the value proposition for customers.
Right. Okay, let's switch gears slightly to broadband. 13 straight quarters leading growth is pretty impressive.
Yeah.
What's the strategy playing out there?
Well, besides just adding customers, they highlighted achieving record low churn for their 5G broadband service.
So customers are sticking around longer.
Seems so. And they also had their highest ever Q1 ARPU growth revenue per user in broadband. So again, adding customers and increasing value.
And they're not just sticking with 5G fixed wireless, right?
Yeah.
There's fiber in the mix now.
Correct. They're planning to launch T-Fiber later in Q2 this year. That follows the Lumos acquisition closing on April 1st.
Lumos. So they'll use that infrastructure.
Yep. And they mentioned leveraging their existing fixed wireless waitlist to sort of kickstart the customer base for T-Fiber.
Smart. And isn't there another deal pending?
Metronet. They expect that transaction to close soon, which will expand their fiber footprint even further. So it's this dual approach, 5G fixed wireless where it makes sense, and now a growing fiber presence too.
Okay, so they're pushing hard on both wireless and wireline for broadband. How's the underlying network keeping up with all this and getting better?
They talked quite a bit about launching their nationwide 5G advanced technology.
5G advanced, what does that mean practically?
It's basically enabled by their nationwide 5G standalone core. Think faster speeds, more dynamic capabilities, better efficiency.
Faster speeds like?
Well, they boasted about hitting a record 6.3 gigabits per second download speed in a real-world field test.
6.3 gigs. Wow, okay. That's fast.
It is. And these upgrades also improve things like network slicing.
Which helps business customers, right? Lower latency.
Exactly. Better slicing, lower latency for business and government clients. And, they continue to get recognition from third parties like OpenSignal and Root Metrics for network performance.
Right. And then there's the satellite piece. T-satellite.
Yeah.
How's that progressing?
Rapidly, it sounds like. The beta has hundreds of thousands of active users already.
Hundreds of thousands, okay.
And the goal, they stressed, is seamless connectivity. You don't have to open an app or actively search for the satellite connection. Your phone should just switch over.
That would be pretty slick if they can pull it off. Did they mention pricing?
They did. Final launch pricing is set at $10 per month.
Okay.
But it'll be included for free on their top-tier plans, the Experience Beyond and Go 5G Next plans.
And for other people, or even competitors' customers.
Yeah, interestingly, they said they'll offer it to AT&T and Verizon customers, too, at that same $10 price for at least a year.
That's an aggressive move. When does it launch commercially?
July 2025 is the target for commercial service.
Okay, so satellite coming soon. What about improving the customer experience, digitally? Less calling into support.
Yeah, big push there. They said they nearly doubled the percentage of post-paid phone upgrades done digitally in Q1 compared to just the quarter before.
Doubled.
Using their TL Life platform. By the end of Q1, over half of all upgrades were happening digitally.
That's a significant shift. Are they using AI for customer service too?
They are. They highlighted their intense CX AI features, which they pioneered with OpenAI.
OpenAI.
And the claim is these tools are significantly reducing the need for customers to actually contact the care teams. Proactive problem solving, that kind of thing.
So better experience and likely more efficient for them too.
That's the idea. Digital self-service plus AI support.
Got it. Okay, let's circle back to the financials then. Strong growth, record cash flow. What's the outlook for the rest of 2025? Did they raise guidance?
They did. Based on this strong Q1, they bumped up several key targets for the full year.
Like customer additions?
Yep. They now expect total post-paid net adds between 5.5 and 6 million.
5.5 to 6 million. That's huge.
It is, and they specified about half of those should be post-paid phone net adds. They called it their highest ever expectation for annual phone growth.
Wow, what about the money side? ARPA, revenue, EBITDA.
Also raised. They now expect full year 2025 post-paid ARPA growth to be at least 3.5%. Up from their prior guidance of around 3%.
Okay, so more customers and more revenue per customer is the expectation.
That's the forecast. And they also expect post-paid phone ARPU specifically to grow around 1.5% this year, which is higher than last year's growth. Plus, overall organic service revenue growth is expected to be higher than they previously guided.
And the bottom line, EBITDA and cash flow guidance.
Core adjusted EBITDA for the full year is now expected between $33.2 billion and $33.7 billion. Okay.
Cash CapEx guidance stays the same, around $9.5 billion. And adjusted free cash flow, even including merger costs, is now projected between $17.5 billion and $18 billion.
17.5 to 18 billion in free cash flow. That's a lot of financial firepower. It really is. They also gave a little color on the Lumos acquisition's financial impact for 2025.
All right, the fiber deal. What's the impact?
The consumer retail business they acquired is expected to be slightly accretive to service revenues, but basically neutral to adjusted EBITDA and free cash flow this year.
Okay, so not a huge swing factor in 25.
Right. And their 50% share in the joint venture's economics will be reported below the line equity method, and they expect it to be immaterial to net income this year. So the main story is the raised guidance across the board, reflecting confidence.
Yeah, definitely sounds like management's feeling good. How did they sort of frame all this for investors? What was the overarching message?
The message was really about continued outperformance. They attributed the strong Q1 to, strong execution, innovation, and what they see as durable advantages, their network, their value proposition, their team.
So confidence in their core strategy.
Right. A focus on profitable, durable growth everywhere. And they kept mentioning this mindset of continuous improvement, always looking for the next thing. The raised guidance is the proof point for that confidence, especially now factoring in those acquisitions like Lumos.
And speaking of Lumos and fiber, how are they positioning that strategy? Is it just about bundling? or something else?
They were pretty clear it's not just a convergence play, not just about bundling everything together. They're positioning it as a distinct growth opportunity, focused on getting good returns on the capital they invest in fiber.
Okay, so ROI focused. How will they go to market with T-Fiber?
Leveraging what they already have, the T-Mobile brand, their national advertising, their retail stores, they see growth opportunities not just in the big cities, the top 100 markets, but also extending into smaller markets and rural areas where they can maybe be first with fiber.
Makes sense. What do they say about the competitive environment? Still pretty intense.
They described it as dynamic, yeah. Promotional intensity kind of shifts back and forth between focusing on plan pricing versus focusing on device deals.
But overall,
they pointed out the industry itself is actually seeing strong cash flow growth right now. So while competitive, it seems relatively healthy financially.
did they mention churn from moving people off older plans?
They did. They said it's temporary and basically proceeding as they expected. Nothing unexpected there.
Okay. And prepaid. Metro by T-Mobile.
Stable with growth in Metro. The wholesale business, they expect that to grow for the rest of the year. Q1 was apparently the low point because of anticipated declines from Dish and TracFone, but they see underlying growth and their T-Ads business offsetting that going forward.
Right. And that long-term broadband target, the 12 million subs by 2028, still on track.
Still on track for fixed wireless, yes.
I
And
see.
for fiber, the initial focus is clear. Be first to fiber in the markets they target. Get that early mover advantage.
Got it. One last thing, any mention of potential tariffs on phones?
They touched on it, said it's uncertain, but if costs go up due to tariffs, they'd likely be passed on to customers.
Which could potentially slow down how often people upgrade their phones.
Potentially, yeah. Something to watch.
Okay. Loads of information there. So now for our favorite segment. This is not financial advice, but based on everything we just discussed, what's an outrageous but plausible trade idea that springs to mind?
All right. Outrageous but plausible number one. Given their very aggressive push into satellite mobile connectivity with T-Satellite and pricing it to even attract competitors' customers.
Yeah.
Consider a long position in some of the satellite communication infrastructure providers. Not T-Mobile itself, but the companies building or launching the satellites, providing the underlying tech.
Okay, what's the thesis there?
The thesis is that T-Mobile's big, bold entry validates and potentially accelerates the whole direct-to-device satellite market. If T-Mobile makes it work and shows demand, it could lift the boats of the companies providing the picks and shovels for that whole ecosystem. It's a bet on the sector getting hotter thanks to this move.
Interesting. So betting on the infrastructure behind the trend T-Mobile is pushing. I like it. Got another one.
Okay, outrageous but plausible number two, focusing on the fiber strategy.
T-Fiber, Lumos, Metronet.
Yeah. Explore a pairs trade. Go long a pure-play fiber internet provider, one that operates in regions where T-Mobile hasn't announced major fiber expansion plans yet.
Okay, long fiber elsewhere and short.
And short, a traditional cable operator, specifically one with heavy exposure in a market where T-Mobile's T-Fiber is expected to launch strongly and be that first-to-fiber competitor.
Ah, so betting T-Mobile's focused fiber attack will hit cable harder in specific areas, while independent fiber players in other regions continue to do well.
Exactly. The idea is T-Mobile might not go everywhere with fiber, but where they do go, especially as a new entrant with a strong brand, they could disproportionately take share from the incumbent cable broadband provider. It's a geographical arbitrage play, essentially.
That's definitely thinking outside the box.
Yeah.
A specific regional bet based on their targeted fiber rollout. Okay, two very interesting, if outrageous, ideas there.
Plausible, though. Maybe.
Maybe. All right, so let's wrap up this deep dive. We unpacked a really strong quarter record customer growth, especially postpaid and broadband.
Uh-huh. Robust financials to impressive ARPA growth, strong EBITDA, record free cash flow, and importantly, raised guidance across the board, signaling confidence.
Right. Key strategic pushes in 5G Advanced, their ambitious satellite plans, the digital transformation with AI, and of course, that significant expansion into fiber. Lots to keep an eye on.
Absolutely.
And remember, as always, none of what we discussed, especially those last trade ideas, is financial advice. It's just to get you thinking and hopefully spark some ideas for your own research.
So what stood out to you in this deep dive? What are your thoughts on that fiber expansion or the satellite strategy? Is it game-changing?
We'd love to hear your perspective. Join the conversation, do your homework, and let us know what you think. Thanks for tuning in to Talk Tickers.